Devon, essentially, what does this mean at such a time?
Yeah, well, just more relief for consumers in South Africa. Another 50 basis points cut by the Reserve Bank, and Reserve Bank Governor Lesetja Kganyago making that announcement due to a short while ago. Remember, this is the third cut this year and will bring some relief to consumers during the COVID-19 lockdown. Investec chief economist Annabel Bishop joining us now for more analysis. Annabel, thanks indeed for talking to us. Largely expected a 0.5% of a relief over and above that massive wave of cuts we've seen earlier this year. Is this going to make a difference to the consumer?
Yes, hi Devon. Look, I think certainly interest rate cuts are very helpful in the current climate to reduce the cost of debt. And, you know, the reality of the situation is now seeing a 275 basis point cut, almost a 3% reduction. It is going to be very helpful. But to expect it to stimulate economic growth would obviously not be realistic. We need to wait and see how long these lockdowns are going to persist for, and indeed, how soon we're going to see it opening up to the next level.
This has been very uncharacteristic of the Reserve Bank when one looks at its general hawkish standpoint. But of course, these are very, very different times here, with reports already coming out that surveys are showing that people are losing their jobs under this environment, and one wonders whether or not that extra bit of cash will really make a difference to disposable income, Annabel. So in other words, are people a bit better off than they were, let's just say, a couple of weeks ago, where they were probably very worried about the financial circumstances?
I think people remain very, very worried. But yes, certainly they're slightly better off if they have debt and they can service it. But the reality of the situation is this economic contraction is likely to be very severe and dire. And the Reserve Bank actually downgraded its GDP forecast to 7% from below 7% at its April meeting. And of course, you know, the risk is that it comes out much worse than that. The risk is that we actually see a contraction in GDP of closer to 10 to 15%. And of course, that will be the reality the longer the lockdown persists. Already, many companies have gone under. There are not jobs for people to return to. And of course, as well, this feeds into a downward spiral. Of course, the reality of the situation is for those companies that have shut, the demand has obviously diminished, you know, from them to suppliers, and of course, well, the ability to pay staff has disappeared. And as that becomes entrenched in the economy, it feeds on itself, and it can exacerbate a quicker decline. These are the risks we're facing, and monetary policy doesn't help in that respect from an interest rate cut perspective.
And I want to pick up from there, because the Reserve Bank governor time and time again said this monetary policy, these cuts in interest rate, can only go so far to help the broader economy. What we do need is a stimulation of investment and confidence. But of course, again, that's uncertain in the times we are. We haven't been here. How we emerge out of this COVID-19 crisis and the investor-friendly environment that emerges months later, I think would be crucial, Annabel.
It will be crucial, and perhaps one piece of good news is that Eskom has used the time to repair the defects in its Medupi unit, certainly one of the units, and is now busy working on a couple more. But the reality of the situation, structural problems are much deeper than that. We've seen bond yields, long-term borrowing costs, very artificially suppressed by the Reserve Bank buying of bonds, the bond purchase program. And of course, this can't persist forever. The Reserve Bank itself says that they cannot buy more than their limitation. And the reality of the situation is we have these deep structural issues you mentioned, particularly rising government debt, of course, increases in expenditure, and these are all very, very worrying, and we have yet to repair all the structural damage that's been done over the past decade. So to entice foreign investors into South Africa and to improve the investment climate is going to be difficult, not least because, of course, globally it's going to take a very long time to recover from the suppression we face.
Just finally, before I let you go, Annabel, could we have waited on this interest rate cut? There is a school of thought that perhaps we need some ammunition when things get really bad towards the end of the year. Again, we don't know what effects this COVID-19 impact would have. Should they have held on this hike and perhaps create more room towards the end of the year, or do you think it was a fertile time now?
Well, whether the Reserve Bank cut by 25 basis points or 50, or whether it did nothing at all, it's impossible to foretell what's going to come in the next few months. Expectations now seem to show that COVID-19 will peak in November instead of September, and of course that then could imply perhaps we go up instead of down in certain restrictions in the economy, that the economic environment could become worse. It all depends how government reacts to the crisis, how it considers lives versus livelihoods. I suppose the Reserve Bank may well have felt that they do have the ability to cut a bit further, and the 50 basis points or 25 doesn't really matter much either way, so perhaps they went for it now to try and provide some assistance from a debt relief perspective, debt payment relief perspective earlier in the system. But looking forwards, the reality is that things could actually worsen quite a bit further, and of course, the real risk is that if the Reserve Bank starts to cut interest rates well below inflation, and of course also, cuts them by too much, we start to encroach in the territory where the advanced economies have their interest rates, and certainly, it's difficult to see much investment appetite in this environment.
Yeah, it's a very big balancing act. Well, thanks very much indeed, Annabel Bishop there, giving us her analysis on that interest rate cut by the Reserve Bank, 50 basis points. It brings the repo rate to 3.75%. We haven't seen this level in the repo rate since the 1970s, but difficult times and very uncharted waters we have. So there you go. That's a little bit of analysis for you, Dudu, on that latest cut by the Reserve Bank on interest rates.